before we get into the token component of Uniswap, just explain Uniswap at a kind of a high level first for those that don't know.
It's decentralized exchange. It's NASDAQ without the middleman.
Okay. And that basically means that there's a pool of tokens. If you own some of those tokens, then you essentially have ownership, right? I can put that in air quotes, of the cash flow for that decentralized exchange.
That's correct. You have ownership is right in air quotes because that the cash flow accrues to the token holders' voting rights, right? So the token holders could vote them theoretically to their neighbor, but there is the cash flow, and the token holders get to vote where that cash flow goes.
Okay. And so walk through just like if you were to look at it as like a company valuation, kind of that evaluation.
Yeah. So 30 bips, 0.3% of the transactional volume on that exchange accrues as cash flow to the token, which on an average of roughly $700 million of transactional volume a day, which by the way has been growing like crazy. I mean, I don't even know the number, but it was a fraction of that just a year ago, right? So that's a $2.1 million daily cash flow haul, which is about a $766 million annual number. And I think if I haven't looked at it this morning, I've been on calls all morning, but I'm pretty sure the valuation of Uniswap is somewhere around $4.5 billion, which puts this at, maybe about a 5x that cash flow. I hesitate to call it earnings because that's like this capital thing, but you can kind of make that, and that's a value company. Like those are whether you call it exactly earnings or not. 2 years ago we were sitting around a table saying, well, how do you value a digital asset? It's not real. I can't touch it. And it's just a series of numbers and codes, and it doesn't really spit off any income. And what is it? And we're past that. There's a whole section of crypto that actually has real world cash flows. Another example in a different world would be Spencer Dinwiddie's NBA contract. Probably half or more of your readership or listeners know this, but there's an NBA basketball player out there who created his own token to brilliantly so to pull forward his $15 million or so NBA contract in cash flows. He basically took his 15 million and sold it for 14.5 or whatever to create an implied yield for the token holder and basically asset back that token with real world rights to pro rata ownership, the cash flows of an NBA contract. There's more and more of that happening in crypto, or what I would more appropriately say, digital assets.
And so when you think about, like, go back to the Uniswap example, is that just a thing where investors are undervaluing that? Like, it sounds like at 5 times cash flow, that sounds pretty low of a multiple, especially given what's going on in the public markets. Is that the right way to think about it? Is maybe that's actually the right valuation? Like, how do you wrap your head around valuation versus kind of the analysis of the actual cash flow?
Yeah, that's so great. I mean, this is where it's, I'm passionate about it, but my opinion is just that. It's very open-handed opinion. But my opinion on that is it's just that people don't know. I mean, everybody, 30 years ago, not very many people had money in the stock market. Today, it's ubiquitous, like lots lower and lower levels of net worth, more and more percentage population of the country. They have money in the markets in one form or another through their 401ks or their IRAs or whatever. Crypto is nascent, Just because it's true doesn't mean people know it yet. That's the entire reason why there can be that price dislocation, because it's just a novelty. People are still trying to get their head wrapped around how to own Bitcoin, much less this funky token called Uniswap they've never heard of.